Good day, everyone. This is Patrick from UsdJpy Code Trading System, and it's Saturday, the 27th of August, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the 5th week of August. And let's begin with spot gold, and as with my other video on the other major pairs, Friday's volatility with the Jackson Hole Symposium and Fed Chair Powell's speech that caused the volatility, which I highlighted the previous week's video. And that's what happened. And all the major pairs did fall lower at the expense of the US dollar rallying higher. And likewise, the US dollar against Japanese yen has also pushed up higher. And let's begin with spot gold. And let's just zoom in on Friday. And probably need to go down to 5 minutes. Right. So right at the start of his speech, spot gold took a dive and then there's a daily pivot here, climb back up towards the fib, and then the final phase, it fell all the way lower, back down into another daily fib here. That's the daily S3 pivot. So a lot of volatility there, and from his speech, he has reaffirmed that the Fed will continue, or the FOMC will continue to raise interest rate to control inflation, and the target is to get to 4%, and currently they're at 2.5%, and the next meeting in the 3rd week of September, they will likely still increase rate by another 75 basis points or at least 50 basis points. So if it's 75, we'll push it higher to 3.25%, and with a couple more rate hikes before the end of year as well to try to reach 4%. So at the same time, with this hawkish move by the Fed, he highlighted it will cause some pain to the consumers and probably the economy. And with that, the stock market has taken tumble as well, while the US dollar strengthened. Okay, so right from the start of the week, it had already started its move down into the support level at the 21 fib retracement, and managed to climb back up, recover on Tuesday and until Thursday. And then Friday happened, and where it fell back down slightly lower than the open for the week and below the 1750 level. So it was not able to climb up higher into the 50 fib retracement at around 1780. So that's still a resistance zone, and well above that, 1800 definitely is a strong resistance zone here. And 1700 is definitely a strong support level. So if it does break through the 21 fib, and it will try to target the 1700, but it's still a ways away from the low for the year. So this structure was similar to the Australian dollar, not as bearish as the euro and the cable. but it does look like it's not exactly a falling tree methods, but it does look like a pullback and then a bearish move down, and with a possible bearish momentum to bring it lower. And let's take a look also on the weekly time frame. And it closed as a bearish spinning top. So it could consolidate for another week until further triggers along the way. But this week there's the non-farm payroll report, so we'll see how much of a trigger that could be, along with other minor news for the US. Okay, but for now, looks like it's struggling at the 1750 area. So that's going to be a interim resistance area. Okay, and let's see whether the US dollar index does reflect that drive up higher for the US dollar strength. And let's switch over to the DXY. And here's the DXY. Let me expand this, and you'll see Friday, there was the initial dip before climbing back up. So that's the volatility created by Fed Chair Powell's speech. And we zoom into on the 1 hour, it did attempt to push below the 1 hour 200, but then climb back up and rally back up higher on the 30-minute. So initially it did, let's go into a small time frame, and for the 5 minutes. So initially it did climb up and then a strong move back down before rallying back up for the rest of the day. So that's the inverse relationship with the other major pairs. And it already started the day, started the week rather, attempting to push up higher towards the 109, which was the previous high for the year. So on Monday, it already pushed up, and Tuesday, so similar to the EU for the euro, it did attempt to test the swing high and then pull back lower, but consolidated with support from the 21 fib. Although it did dip lower on the Friday, it was just a spike lower before climbing back up and right into basically the middle range for the week. And so let's see, because this support now is not going to be tested soon. So let's move this to a swing low with this bullish reversal move. And you see why it stopped there. That's the 38 fib retracement of this swing move. And it stopped just short of that. So within a couple of bullish candles here. And if we look at the extension, if we flip this over, Then the 138 FIB is going to be much higher than the next round figure at the key psychological level at 110. So that's going to be much later if it gets there. So the next resistance zone, if it does break the 109, is going to be at the 110 level, which we highlighted last week. And let's mark this area here between the 38 FIB retracement and the 107 as an interim support. Key support is going to be at the 62 FIB retracement near the 106. And let's remove this for now, as well as this level for now. Okay, so this coming week, there's a non-farm payroll report. That's the only key US news coming up, and as well for the rest of the major economies. So this will be one highlight to watch out for. Okay, so we'll see if this week is able to break out higher above the 109, or whether it's just going to consolidate within this this range here. And if the non-farm payroll report will provide any trigger for that move. Okay, let's move back to the other major pairs. Let's move on to the dollar yen. And likewise on Friday, the dollar has strengthened here, similar to the US dollar index, although it did not dip as low. However, on Tuesday, it did try to break down lower, but managed to climb back up for support around the 21 FIB retracement. So it still has not tested or the swing high for the year, just above the 139 level, but it did now close above the 137 again. 135 area is definitely going to be support. All right, and above that, it's a 140 round figure. And let's see if we do shorten this range with a bullish reversal move. And that's where it pulled back to find support at the 38 FIB retracement. So now it's attempting to climb up above the 78.6 into this swing high. And above that, there's still quite a way to go at the 138 FIB extension at the 142 plus area. So let's use this new FIB retracement and reversal, potential reversal. So it's already retracing back up into 78 FIB area. So if it does continue higher, it could test this recent high, this year's high. But it may not break so fast. It could just consolidate until the Federal Reserve's turn to have their meeting. in the third week of September for the potential rate hike. Okay. So watch out this week for the non-farm payroll report. That's going to be the key trigger for the week now. Have a safe week and a good trading week, and cheers for now.